Hello, everyone. Welcome to our live stream with Swen Lorenz. It's great to have you here. And I say hello to everyone. It would be also great to see who's in the live stream and that you send a signal through the chat that you are here, like a hi or a hello or whatever you want to comment today. Your mood is on. Hello, Sven. How are you doing today? Sven, do you hear me?
I can now hear you on repeat.
You have to stop the stream on your computer if it's running.
Sorry.
That happened to me also.
Right. That's my first live stream experience. Hi, everyone. Yeah. So I'm Sven. Hi, Tillman. Great to be on your chat. Thank you so much for having me.
It's nice that you're in. And yeah, there are two Germans speaking English to comment the question from the chat.
With a funny accent.
Yeah. we will make the best sentence this day. And sorry for the inconvenience. The link from the email doesn't work anymore. You have to go on the website and click on the YouTube website, like youtube.com/valuedach. And there you find the new link. So if anyone is missing, send the link out to them. There happened a technical problem. Before we start, I want to drop the disclaimer to inform you on the legal side. You find the disclaimer on my website. It's also linked below the video. The main message is we are doing no advice for you. You have to do your own work and do your own research to find out interesting ideas and to invest for yourself. So take this as a qualified talk and hopefully also entertaining, but we don't do any advice, and do your own research. So Sven, we wanted to start with a view on, or with a question how your life is currently going. You're locked on an island at the moment, am I right?
Yes, I'm on the little island of Sark, which is in the English Channel, just off the coast of Normandy. I can see France from the upper floor of my house, so France is much closer than the United Kingdom.
We also brought some pictures for you that you can get an impression where Sven is currently located. Maybe you can just comment them and that people get an idea who you are and where you're located.
Yeah, and I mean, we're showing this because there's actually some context also for people who are in the finance industry and who are interested in economics. So the island that I'm on, Sark, is self-governing. It doesn't belong to the United Kingdom. It's a crown dependency. It belongs to the British Crown, and we're independent. We're self-governing. We're the smallest independent state in the British Commonwealth. And as you can see from the photos, it's also a beautiful place. It's quite small. It's about 2.5 times the size of Monaco, and with just 400 people. So it's tiny. We're a democracy. All politicians here are volunteers. We do not have career politicians. We have our own airline as well. The government is prohibited constitutionally from running up debt. So the government of Sark actually has cash sitting in the bank and no government debt, which is an extraordinary situation. And we're just a nice little community of people who share a very quiet lifestyle. We obviously care very deeply about nature. You can see the island is in great condition. And we live a very old-fashioned life in the sense that government has little say in our lives, and government is very minimalist. For example, we don't have any employment law. There's just simply no law for that. So everyone does contracts as they like. And it's where I just spent the last 3 months. I live here, and I'm using this place as a retreat where to write a lot. As you probably know, all of you, I'm writing a blog and I churn out quite lengthy research reports. And being on an island with just 400 people where there is only so much to do is very conducive to, spending long evenings reading annual reports and doing your research and coming up with content for my blog. So now you've got a little impression of where I've been under lockdown, which was not too bad here, I have to say.
But I think you already missed travel because you're a guy who wants to travel a lot through the world, I know.
Absolutely. And I think that's something that my readers appreciate. I'm very passionate about actually going places and seeing things firsthand and meeting people and seeing where things are happening and trying to pick up a few trends before others notice them. So my life is pretty much divided between half the month I travel, the other half of the month I'm in Sark. I'm also in London regularly. And it's been, I can say with confidence that since 2001, I have not been in one place continuously for as long as these 3 months of lockdown. And I'm not complaining. It's been quite pleasant. I'm looking forward to going elsewhere again now that things are starting to normalize again. But it's not been a bad time, I have to say.
But I think one downside I heard about the island is that the bread quality is a bit bad. I've heard from one report I've read about you.
Yeah. I mean, that's my running joke, basically. There are certain things we don't have. And for example, we don't have a German bakery. I think culturally, in every sense, it is like living in England.
Yeah.
I'm dreaming of the day when we have a direct boat to France, so I can get cheese delivered straight over from France.
Yeah.
But we haven't managed to arrange that yet. That's a future project.
And there's one question from the chat. So questions from the chat are welcome. Today we're having the agenda that you're getting to know Swen a little bit more because he's the first time on the channel. So it's always good to introduce people if they're the first time here. And then we are moving on into discussing you. That's also getting to know you, how you develop as a value investor. And we are looking into 2 cases, and that's SNP and Fiverr. We will start with Fiverr. And then it's the possibility to you to ask 10. I select 10 questions from the audience that you will reply to in a fast, quick way.
Okay, I'll do it shortly then.
Yeah, that's the idea. How did you develop as an investor? Like maybe I want to start with the question, how did you invest 10 years ago and how you're investing now? And what was the shift maybe that happened in this 10 years?
Yeah, shift is definitely the right word to use in that sense. So I'm a child of the 90s when it comes to investing. I started investing seriously around, must have been 92, 93. And back in those days, value investing was the way to go. Also because the stock exchange was a very different place at the time, and you could still much more easily, I don't want to say easily, but much more easily than today, find companies that had great hidden assets, like unused land that was on their balance sheet at historic costs. And then sometimes these companies either sold the land or it was spun off into a separate property company and things like that. This was very much classic value investing, the sort of stuff that probably Buffett would have done in the 60s. And I saw in many ways, I guess, the last hurrah of that. And that was great in the 90s. And it's obviously, I mean, you can still find cases like that. But I have had to come to the conclusion and in a way teach myself a slightly different style, in the sense that, as we all know, especially in the last 10 years, it's been all about so-called growth investing and tech very much first and foremost. And the tools and tricks of the trade and the ways of analyzing and finding companies that we used in the good old days of value investing, that doesn't quite work with these companies. And I have to admit, I missed out on stuff. I should have changed and adapted and evolved my style early on. It took me a while, but I'm now at a point where I'm one of my passion projects for the next couple of months is to write an article about how there is probably no real difference between value and growth, because at the end of the day, it's all about what cash comes out of the company. It's just that with growth companies, the cash coming out is further into the future, so it's a different timeline. But at the end of the day, it's always about how much cash can a company send towards its shareholders in one way or another. But that has been a challenge, and I think I've gradually risen to that challenge. But there's definitely an element of value investing as it was in the old days needs adapting.
A short question coming back to Sark. Is there a golf course on the island?
We're building one right now. I mean, when I say we, it's like I always speak as we, the community. So we have a pair of billionaire twins who have purchased large parts of the island, and they've become the biggest investors here. And I assume that they will, it's not in the newspaper yet, you can take that as local gossip. I assume that a 9-course golf course will be built here very soon, and maybe one day that will become bigger, but we'll have one in, I guess, 2 years' time.
Let's go back into investing. I've read the name often in your reports that somehow changed your style of investing. That's my feeling. It's Hypoport. Can you maybe explain a bit more about what's the company doing and how it changed your way of investing?
Hypoport was really, and that's a German company, that was really one of those definitive moments where I just also, realized that I need to up my game and look at companies that in the past I probably wouldn't have considered. I wrote an extensive research report about that company in 2010, published it on my website back then. It's a software company. It operates a software for the German mortgage industry. And the stock, amazingly, was what you could describe as a genuine value play in the high growth software industry at the time, platforms. I have to plug out a figure from Air now, but I guess it was trading at something like a price earnings ratio of 7 or something like that. It was ridiculously cheap by anyone's standard. High growth, huge potential addressable market. I mean, all the hallmarks of a great growth company were there, but it was trading at the price of a down and out value stock. The multiples were extremely low. And that company by now, over the last 10 years, has risen by a factor of 70. And at no time would you have had to take great risks there, because it already had a leading position in what it was doing. It was making money. I think they even paid a dividend back then, if I don't remember right. I'd have to check that. And I mean, the biggest downside was that for the first 2.5 years, it didn't do much. So it was going sideways. But then eventually the idea worked out. And this thing has been going absolute gangbusters since then. And I mean, there are multiple lessons there to be learned. One is that you can actually find amazing growth companies in the software industry, in companies where you wouldn't necessarily expect them. I mean, this is not Silicon Valley. This was just Germany, And sometimes you do find stocks where you just have to say, in a way, it looks too good to be true, but sometimes it is true. You just need to look in corners where no one else is looking yet. And that was a great case.
Are you still invested in Hypoport, or how did you?
Sold out way too early.
Yeah, I think I know a friend from you of you from Hanover who also did the same thing.
I know dozen people like that. We're all guilty.
Yeah, like this. Yeah. Anyways, to switch the topic. How do you generate ideas nowadays? Like, what comes up in your? Do you have a large network that you can talk with? Do you screen? How do you get ideas? And also, what's the next step to follow an idea for you? Like, what are the indications that I invest my time, because you only have a limited amount of time to do research?
Yeah, idea generation is a crucial subject, and one that I believe. I just the other day I had a chat about that with a colleague of mine in the fund management industry. We were discussing, how do you find analysts that generate good ideas? Because it's certainly not down to sitting down at your Bloomberg and running a few filters and screens. Pretty much anything that can be easily filtered out from any publicly available system is not a great idea as such. I mean, you're very unlikely to find anything useful there. In my case, idea generation boils down to 3 things. One is, that's probably the most mean one to mention because it's difficult to copy. A lot boils down to life experience and having been around for a long time and just having a lot of existing knowledge in your brain so that you can connect dots when you come across something. That's certainly very, very helpful. If you have come across so many companies and so many past developments that something just triggers something rather randomly in your brain. Then having a great network is certainly extraordinarily helpful. I mean, I have about, I'd say, half a dozen people who feed me ideas that I take very serious. I mean, people when they ring, I say I'll switch off everything else and I listen to your latest idea. And I mean, the day only has 24 hours for all of us. And I think having a network from which you get ideas and also where you can bounce off your own ideas, that is absolutely invaluable. And then quite simply, I think going out and meeting random people and exposing yourself to situations is extraordinarily helpful. I mean, I recently, a lot of readers gave me enthusiastic feedback about a report I wrote about a company called Helios Towers, which is a mobile phone tower company listed on the London Stock Exchange that previously pretty much no one had heard of before. And I have to admit, I heard about it at a conference in New York, the Punch Card Value Investing Conference, which few people in itself have heard of because that's only 2 years old. And I just picked that up from someone who was speaking there. I don't think anyone else paid attention, but I just immediately connected a few dots and ran with that idea. So I think that's really the 3 steps that I take for idea generation.
We have your reports on the conference also on the Value Dach blog.
Oh, yes,
so we'll link it below that people can find it and get an idea about the conference. How long did it take for you to build this network?
Well, I mean, I'm 45 now, and I started buying my first stocks when I was 15 or 16. So, and then I started going to shareholders meetings. So I've been around for a long time. But saying that, I don't want this to sound like you need to have been around for decades to build a valuable network. Quite the opposite. I think anyone who's younger nowadays and who's maybe just starting out has a great advantage, because there is this thing called the internet, and there's LinkedIn, and I think there's also a very different culture nowadays. If you're good at staying in touch with people and organizing live streams on the internet and stuff like that, I mean, you're the man here to look at in that regard. You're building an amazing network through the work you do. There's so many possibilities that 25 years ago you didn't have. That I think is really the golden age of networking and building your own hub of useful contacts. I'd say within a couple of years, you can build up quite an extraordinary, valuable contact network. Shouldn't be a problem at all. It's all down to you to create.
Yeah, it's also depending on the type of person you are, but there are many chances out there.
Yeah, it helps to be a bit of a social butterfly.
One company where the word network also plays a role is the company Fiverr, where you're speaking about networks effects, but let's go to that later. Maybe you can explain the basic things Fiverr is doing for the
So Fiverr is an online platform, a marketplace where any freelancer in the world can offer their digital goods. So if you offer to design logos or write marketing copy or edit videos, for as long as it's a physical thing, a digital thing, not physical, you can offer that on Fiverr. And the name refers back to the early days of the company, when the idea was you can offer anything for $5 a Fiverr. That evolved in the meantime. You can now, for example, hire the guy who designed the logo of Apple. You can find him on Fiverr as well, but he's $10,000 for a logo design. But anything is on there, and it's an Israeli company, and they are basically what I would describe as, in the future, they're going to be something like the Amazon for freelance work.
That's an interesting opportunity. I want to also say hello to the people who joined the live stream newly. Welcome to everyone. We are now discussing Fiverr, so if you want to add questions about Fiverr, please put them in the chat, and then we are taking a dive into SNP. And for the open questions that came in, we are having, after this 2 parts, a session for the questions that are covering other topics. We want to keep them around 10, so I will select the best ones for you then. So let's go back to Fiverr. What made you catch fire on the idea with Fiverr?
It was a combination of factors. First of all, I have actually used Fiverr myself on and off for a couple of years. And including with great frustration, because a couple of years ago it was not really the best website, I have to say, but at least I was aware of it. And then they went public last year on the New York Stock Exchange, and I met up with a reader in New York for lunch, totally coincidentally, because that person just sent me an email and said, "Hey, are you in New York? You want to have lunch?" And we ended up speaking about Fiverr and about them now being listed on the stock exchange. And going back to what we discussed earlier about changing style and also, having the lockdown to work on new ideas. When all this stuff happened in March and April, for me, this was a crisis where I was lucky enough to immediately have time on my hand to work on what needs to be done now. And it was clear to me that digitization was going to be an even bigger subject going forward for all the reasons that we know. And on one hand, you have the analytical side when you look at stocks, but then there's also this, oops, my monitor just went to sleep. There's also the aspect of, 1 second, sorry for that.
No problem. It's the first time in a live stream, so everything can happen. Maybe you have a cat that's coming as well. We will see.
Oh, yeah. Yeah, back on.
Our kids crushing the stream.
Yeah, but there's also the important aspect of looking at a company like a speculator. In German we would say wie ein Börsianer. And with Fiverr, it was absolutely clear in my mind that this was going to be the moment when that stock will get a lot of interest and exposure and PR. And I was literally writing night and day to get my report out because the stock already started to rise. And I thought this is going to hit the headlines soon. And after my report came out, it doubled pretty quickly, not because the company doubled in size or the profits doubled, but just simply because that just hit, the zeitgeist, the spirit of the age. And everyone was interested in the subject all of a sudden. So it was an ideal situation, but also one where you had to combine a general understanding of the world with an analytical side as well. It's always several factors, really.
I would describe Fiverr as a platform that brings together people. So you have two sides in this case, like customers who want to get services and service providers in this case. As I understand Fiverr, you can correct me. I want to go into details about surplus the platform edits for both sides because it's important to give surpluses to both sides. Maybe let's start with the customer. What's the surplus of the customers that Fiverr gives them, and what kind of customers they have?
So it makes it very easy to find freelancers who are offering exactly the kind of service that you are looking for, which I think by now are like 350 categories. So almost anything you can imagine is on Fiverr. The artists or the freelancers on there all have there's a feedback system, and you can look at their past work. And that makes it very transparent, and you have a lot of choice. And then a major factor is that, of course, they do not have very high acquisition costs. They need to pay commission to Fiverr, but besides that, they don't have to advertise their services or, travel to meetings or something like that. So on the whole, the services on there are a lot cheaper than what you would find elsewhere. And then if on top of that, you add the fact that many of these freelancers live in countries or in regions where the costs of life is a lot lower. So you can hire people who work for hourly wages that are not as high as, for example, in London or New York. And they, in turn, looking at it from their perspective, amazing artists and freelancers get exposure to a global audience from their living room or, wherever they are with basically no upfront cost. It's just that they have to pay commission to Fiverr when a transaction takes place. And they probably make, relatively speaking, more money than they could earn in their home market. So there's really a win-win situation. It's almost like an arbitrage also, buyers go to cheaper countries and sellers sell to more expensive countries. There's also a beautiful story of, globalization in its very positive form, where everyone benefits from a more global marketplace, and it's done without any friction. It's a very smooth website nowadays.
But there's still the issue of trust and maybe also the cultural values that go into hand. If you talk with friends about teams and how they work together in global companies, there also were different ways of, if someone says no in Germany, it has a different meaning than someone says no in India. And how does Fiverr deal with it as an agent in between that has to build trust for the people that come on a platform and want to get information?
I think the feedback system helps a lot with that, and also the fact that they can provide examples of their past work. but some of that will never go away and needs to be managed. And as I said, I had my fair share of frustration with Fiverr because there was exactly what you just described, the cultural differences when I say one thing and the vendor on the other side understands something totally different. It is, I mean, it can be hit and miss, but at the same time, you know, any freelancer you hire, you can have that problem. And I've hired enough freelancers in London where I got products where I said, this is not what I wanted, you know. So it's ongoing work, and I'm not saying this is like the perfect solution and the be all end all, but it's come a long way. And the number of transactions on there is amazing. And then we've got, and the report on Fiverr is now actually for free on my website. I've made that available for free. So
we will add a link for the people who want to read it.
Yeah. There are some key figures that are quite impressive. Like the average spend per customer per year is going up every year, which shows that the existing customers are happy to spend more money. And that's a very powerful metric if you have that as a company. And the fact that Fiverr has somewhat, well, I mean, basically organically evolved towards cheap products only to now having, I mean, the number one poster child is the logo designer who made the Apple logo. To have him on there for $10,000 a logo, you know, that's just, it shows there is a huge, the entire width, I mean, there's a huge span of different providers you can find. And now there's Fiverr Pro. So freelancers who are extraordinarily good get upgraded by Fiverr and they're in a different league and they can charge more. That system is evolving, but it's getting better. You know?
Like, what is this Fiverr Pro about? Can you maybe explain it a bit and where it adds value to the platform?
First of all, it's a selection. So as a freelancer to get into Fiverr Pro, it's basically you are handpicked by the Fiverr team. They look at your work and your customer communication and how you delivered in the past. And Fiverr is nowadays making available all sorts of project management tools. They're also keen to sign up more sophisticated customers and including corporate customers who don't just, you know, buy a logo or get a video edited, who actually manage entire projects online. And online project management is nowadays a skill in itself. There are people who just do that. And Fiverr is offering the tools to do that online. I have to admit, I haven't tried that one out yet, but they seem to be doing that with great success. The numbers, they are looking good as well.
To pick up one question from the chat from Michael Maser. Hi, Michael.
Hi. I think I know that name.
Yeah, I know him as well. He's a friend of mine. He asked if it worries you that Fiverr still needs a new financing route. That's kind of the cost of growth as well. I want to add the question, where do you see with growth, there also comes in some points scale and scale advantages. Where do you see them? But maybe let's start with the question about the financing round and if it worries you that they need to raise capital again.
I'm certainly not worried. I mean, I would frame this, there's a certain context to it. I mean, I don't think if you had asked Fiverr in February, are you planning another financing round? They probably would have said no, because they were on course to breaking even in late 21, you know, first half of 22. It's not like they necessarily needed money urgently, but then their stock price took off and they got a lot of PR, and then a very well-known tech investment fund from Hong Kong bought a stake of 1.7%. So, I mean, these guys were just in an extraordinarily good position all of a sudden. And obviously, any growth company can always use more money. There's always more you can do in terms of investing. But I think there was a strong opportunistic angle to it where they just said, you know, this is the moment to get some more cash in, because we can do it right now. And we live in a very volatile world. You know, I mean, we've just seen how the world can change within a few months. So they just decided to raise, was it 100 million or 120 million at a price of 60? And I mean, in March, they were trading at 22. So I think it's more of an opportunistic thing than an urgent need for them to get more money in. They were doing quite okay money-wise.
How do you track how the money or the capital they raised is used? Do you have a certain metrics, or do you have a certain framework to track that?
something that I think you start to appreciate once you've also run a few companies yourself is that each company is just very, very different. And to try and create a framework that you then apply to all of them is, I'm not sure that works. In my Fiverr report, I actually created a chapter where I listed out, I think, something like a dozen key figures to monitor in the case of Fiverr. And I think it's a matter of investors should monitor these key figures. They will not always all move in one direction. There will always be, it's not like everything was always perfect. And then at the end of the day, you have to make a judgment call. If 9 out of 12 figures are moving the right direction, then you have to, look at those 3 others and say, how much of a risk do these 3 that are not going in the right direction, how much of a risk do they pose? There's very, very much a judgment there. But at the same time, I think in many ways we live in a golden age. Everything is available immediately right now. I mean, I remember days when I had to, some publicly listed companies refused to issue their annual report to people who weren't proven shareholders yet. So I had to travel by train to another city to go to the court, to the company registry, and pay a bureaucrat to make a hard copy of the annual report of that company. Compare that to nowadays, anything is available, and it's more a matter of you have to sift through the avalanche of information that we're facing on a daily basis.
Maybe let's go back to the question on scale. Where do you see the advantages that are coming in for Fiverr if they are scaling further up? Maybe also in terms of marketing, which is a thing where they might profit if they get scale. Also in terms of network effects, to come back to the point that you had before. Yeah, absolutely. So starting point is they were on the course to break even in 21, 22 sometime. And because it's only digital goods, they do not need to build warehouses or create a fleet of jets to deliver packages. It's a company that will just have incredible economies of scale once they've reached that point where they get beyond critical mass, which now seems to be on the horizon. And something that's very impressive is once you start looking into it, they have a lot of organic growth. They have customers just coming their way. Yes, they invest into marketing, but that alone, I think if all their growth was driven by marketing, which nowadays so many companies that is the case, I'd be quite worried. But they have a strong organic growth component, and marketing in the sense in the case of Fiverr can also involve things like they're now creating these different language versions. So they've just created a German version of the website a while ago and a Spanish version. And that increases the virality and the organic growth. I have to say, I'm super enthusiastic about this company right now. There's just, it appears like finally all the stars are aligned. And add to it the fact that all of a sudden you've got millions and millions of unemployed people around the world for all the reasons that we know. And many of them are looking for freelance work, how to complement their income or their unemployment checks. And you have at the same time ever more companies who are feeling they need to digitize and upgrade. I mean, to give you an example, my supermarket here on Sark, we have 400 people, and it's not like our supermarket was an online operation. But even they have now started to operate somewhat digitally because of the whole lockdown. Everyone is onto that now. So the market is humongous, and no one else has quite the same model as Fiverr. So that's an important point to keep in mind with regards to scaling. Fiverr was laughed at for many years, and it was not taken serious. And they have an approach that is, no one else of that size has that approach. They're similar companies, but they don't quite exactly do that Fiverr approach. And somehow Fiverr seems to have hit the mark now, and they've got that magic sauce now. The product works, and once something grows in our globalized online world, then it can just grow to an extraordinary size. And with a bit of luck, maybe Fiverr is getting there over the next 10 years. That's my hope. Is the moat getting bigger and stronger if they grow?
I think there's definitely a network effect. I mean, I recently had a fairly extensive look at the different product categories, and it appeared to me like my number one idea was that I could build an entire company using only Fiverr products, so to speak. Anything to build a company you can buy on Fiverr, which means I don't need to look anywhere else now. And that keeps me on their little patch. I'm not the world's leading mode expert, nor am I the world's leading platform expert. So there are a lot smarter people out there. But for now, it looks like they've got it all worked out, and there's no one who is, quite like them, which helps a lot.
Isn't there a tension in like commoditizing creative services, which are a kind of creativity, and commoditizing are also tensions that you still have in this kind of artistic service field? How do you see that tension?
Yeah, well, I've spoken actually to some freelancers in London, London being one of my reference points because I lived there for 15 or 18 years. And these people were, to put it bluntly, not happy about Fiverr because they feel that all of a sudden, millions of other people are invading their turf. And they also feel that we know better, we are the experts, and who are all these newcomers who are now pitching to our customers or who are stealing customers because our customers all of a sudden read about them or see an advertisement or see a YouTube video. And there is definitely an element of, for some people, pay will go down, and there's a commoditization that creates competition and tension. And I mean, this is a societal subject. I mean, there is the whole aspect of, on one hand, you have an emerging middle class in all sorts of emerging markets, and you've got the middle class being squeezed. And a designer in London may have had a very comfortable life until recently, but all of a sudden may struggle to pay the bills because he now has to compete with someone from Montenegro, the Ukraine, or India. And I mean, this is not a subject to which I have an answer, or it's just simply, it exists. It's a tension. It has political ramifications, but it's nothing I can change. It's certainly a leveling going on in the world right now.
It's also quite interesting to think about the total addressable market that Fiverr can reach, where these borders are, because there are some relationships you want to have long-term relationships with your agencies and have them for longer-term project, and there are short-term projects that are easy to commoditize and give online, and that are easier to buy from someone else. It's just this, either do it in-house or build a long-term relationship, or just go on a platform and buy it there. There's certain
and I mean, isn't that the story of the internet and the entire world right now, in the sense that I order books online, but I also go to bookshops, and that will never change. And I mean, for me, it's probably 50-50. And I mean, I just looked up yesterday the numbers for the market share of Amazon in retail in the United States. Would you know what that is?
10, 20 something or percent.
Everyone puts it way too high. It's 6%. And they're still smaller than Walmart. And that's after 25 years of Amazon being, growing gangbusters. It's not like the online world will extinguish the offline world. They will just coexist. There will be eventually a leveling out, I think. We all want to have real relationships and meet people, and we don't just want to have Zoom chats. We also want to have a beer in Munich in a beer garden, or in Stuttgart, here in Stuttgart.
And we also want to have contact to people, and especially in investing, the contact to management is important. How do you see the management in Fiverr, and how do you get confidence that you're investing in the right people?
These are two very distinct questions. So with regards to Fiverr, I looked at the track record of the management, and I'm one of the benefits you get once you're past, maybe 40, maybe it's different for someone else, but for me, I like to draw the line of 40. You have a lot of life experience, and then you all of a sudden realize that having done things before and having seen things before is extraordinarily valuable, which is something that as a 22-year-old, I would have never believed. I would have always said, I know better. And, like we're the young ones and we know how to do these things, and it's all the new way. And I've come to realize that actually having done something before is extraordinarily helpful. So I think when you look at a management team, check what they've done before. And in the case of Fiverr, there is definitely an element of a whole number of the key people came from a company called Wix, which is also a kind of online platform. It's for building your own website. And Wix has been very successful, including as a publicly listed company. It's made very good returns for its early investors. And the people from Wix then moved over to Fiverr a couple of years later. And that helped a lot. It helped a lot in convincing me that these people know what they're actually doing, and they can avoid a lot of mistakes that they probably made earlier in their life. At the same time, I have to say I feel passionately about, I don't want to meet management personally, and I don't want to speak to CEOs, because ultimately what always happens is these people are, I mean, a CEO, will have done his pitch hundreds of times, and he will have heard every single question before, and he basically spends 24 hours a day thinking about how do I position my company and present my company. And most CEOs will manage to convince you that their company is the hottest thing since sliced bread. And I tend to find that getting the spiel about a company from the management team or an investor relations person or a CEO puts me into too positive a mood or too positive an assessment of the company. And I'm much better off sitting on a remote island, reading things, and not even having the temptation to meet anyone because it's so far away from here. There's definitely an element that I think I would shy away in the future from meeting CEOs. I make exceptions.
Maybe you should find someone else, someone who visits the CEO with you, who keeps you on the ground and helps you to reflect the things, because I think it's
absolutely
important.
Yeah, and I mean this is actually a serious point. I do believe that no one can truly succeed as an investor nowadays all by themselves. It's all about teams. You need to have a bunch of people together who come at subjects from very, very different viewpoints, and ideally, people who in a way naturally disagree because they look at it from very different viewpoints. And that's why I always tell everyone, build a network of a few close-knit friends or colleagues, because that's absolutely invaluable. Don't do it by yourself. The world is way too complex to try and take on everyone else by yourself.
We're having a question from the chat that wants to ask you about the perspective for the next 3 to 6 months. And as a value investor, I have to reframe this in a certain way, because what is your perspective on Fiverr for the next 10 years? Where do you see the company in 5 or maybe 10 years, if you could guess, for the next 10 years?
So my hope and expectation for the company, and you can choose whether it's hope or expectation, I would probably put them equally, is that this will be a new Hypoport, like the company that we discussed earlier, where I found it early enough, but then you get impatient and you chase the next shiny thing. I have high hopes that after the first 10 years of Fiverr warming up in the first years of its existence, the next 10 years should be pretty amazing for the company. And I don't see any limit to growth as such. They've just really scratched the surface of it. And they don't have, in my view, no real direct competitor who's exactly like them. So I think this is a great company to sit on and just, put into the back of your portfolio and forget about it. That being said, I'm very mindful of the fact that since March, April, everything that has tech or internet written on it has gone through the roof, and probably things have moved too fast. And I mean, we live in, it's been a crazy year by anyone's standard. And everyone and their brother is now chasing online platforms and anything relating to online work and so on and so forth. I don't know where it's going in the next 4 weeks or 3 months. We can have, political events can happen. God knows. When I wrote about it, it was trading at half the price where it's today. It's certainly, I always advise my readers never to chase a hot stock. Wait for it if it comes back, and if it doesn't come back, there will always be another story. That being said, from a 10-year horizon, it probably doesn't matter what you pay for it, for as long as you've got some. We all missed Amazon, and it wouldn't have mattered where we bought Amazon for as long as we had some.
With your experience, you also made it through the dot-com bubble, and this picture of the dot-com bubble is coming also from the questions from the chat. Do you have the feeling that we're in a comparable situation, or are things a bit different this time?
I think one key element is different in the sense that during the dot-com boom, most of these companies were still pretty unreal, in the sense it was mostly plans and hype and hot air. And there was little substance there. And for example, I mean, back in the days, I didn't live in Germany anymore, but my friends in Germany, they couldn't make a payment online because they didn't have a credit card and there was no means to transact. It was that basic. It was literally the Stone Age. And valuations were even more extreme at the time, and there was even less substance to it. So the dot-com bubble bursting was not surprising at all, and I mean, it fully deserved bursting. I think nowadays there is a lot of overvalued stuff there, caused by, in my perception, I'm probably quite old-fashioned. I think there's definitely an element of, we have a cult of celebrity. We have a social media obsessed and social media driven age. We have a very polarizing political world, and like polarized in all sorts of ways, where people also invest in their beliefs. And I think all of that leads to certain companies. I'm not mentioning names because I'm not taking any sides in that whole debate right now, at least. That is driving certain valuations to a point where it's really not healthy and sustainable anymore. At the same time, these companies are, in most cases, real companies where something is already happening, and you can see that some of them might work out splendidly and surpass all expectations. So it feels different to me, but there's also, one has to say, a lot of hot money chasing stocks. But it's different. That's the bottom line, I think. And history doesn't repeat itself, it rhymes. It's always different. You can make some comparisons, but it's never one-to-one.
What is also, you mentioned 2 points. I want to add something to you. What is it interesting is to compare the world 5 years ago to what we have now, and think this in terms of new product categories for Fiverr. For instance, the idea of Instagram and making beautiful Instagram pictures. I think 5 years ago it wasn't that big, and it's also a chance for like services on Fiverr, and how product categories evolve and how fast things are changing. It's quite interesting to see this also. If you thought about TikTok 1 year ago, what was TikTok?
Yeah, and maybe in 2 years, we both might have our own hologram, and everyone has a hologram designer, so that in our Zoom chats we're actual holograms instead of videos. Who knows?
It's interesting what Facebook is they're doing with the Oculus glasses. I've heard about it, but I haven't tried it. So
I'm not on Facebook, so I wouldn't know.
And there's also the question about another stock I want to take a dive into, but maybe not that long as we did with Fiverr, because there are many people waiting with questions, and I promised to have the open round with questions. It's SNP. From the reports I've read, it has many points on the checklist to be a hot stock in the terms you defined just now, but on a valuation base, it isn't that much a hot stock. How do you see the company today, and what do you find generally interesting in SNP?
So the reason why I discussed this stock on my blog and published a report was, again, it goes back to Hypoport. I mentioned that the last time now. I was looking for a company that might have the potential, and I'm really saying might have the potential, to rise 100-fold over a period of 10, 15, or 20 years, the famous 100-bagger. And you've got Chris Meyer on your live stream next week. He's the man who wrote the definitive book about the 100-bagger.
I'm happy to have him.
Yeah, and I took out his book, and he has a checklist, what makes a stock a potential 100-bagger in the long run. And I had somewhat coincidentally discussed SNP at the time with a couple of colleagues, and the company was going through an extraordinary transformation at the time. And this is where I have to refer back to what I mentioned earlier about there's the analytical side on one hand, but then there's also the perception side and the spirit of the age, the Zeitgeist, German word that made it into the English language. So SNP in the past was a consultancy company that helped other corporations to transform their software, their corporate software systems, but by sending actual consultants, humans, into these companies to handle the transformation. And over the years, SNP developed a software solution to do pretty much the same thing. And it still requires a few consultants to be involved, but you now do this transformation through software. And they now have a bit of a boom because of the latest version of SAP software that requires a transformation process in a lot of large corporations. But it's really transformations in any sense. It can be mergers, acquisitions, far-reaching legal changes that need implementation, or tax changes that need implementation in IT systems. Brexit is going to be, I guess, a huge subject in the EU when it comes to IT systems. And SNP was at the time, interestingly enough, still perceived to be a consulting company. And consulting is not a very high margin business because you have to pay so many consulting, salaries for the consultants. It's not very scalable, but they had just started to move and reach critical mass in becoming a software company. And selling software is super scalable, has high margins. So my idea was to catch this company just when it was going from consulting company to software company. And the valuation multiples struck me as not expensive. It wasn't the biggest bargain on the planet ever seen, but it struck me as anything but expensive, and potentially with a leap forward in the next 1 or 2 or 3 years because of that big business they're doing with SAP transformations. And on the back of that, I wrote a report and analyzed, how many boxes does it tick of the 100-bagger checklist and all that. And I made it very clear at the time, it was an early stage assessment. And I said, we even need to wait for more information to run a long-term, I wouldn't even call projection of earnings, but more like a feasibility study. Where could the earnings be in 5 or 8 years? And we still haven't done that yet because the situation is evolving in a fast pace, but in a very positive way. All the right things are happening at SNP. And for anyone who's interested in details, I highly recommend listening to the earnings call they had after their last quarter, which is an hour long, but it gives you a lot of insights into what's happening at SNP right now. So that was, to cut a long story short, that was another attempt of mine to leap into a new arena where value investing meets growth investing, and we have the best of both styles.
We will add a link to the earnings call if we find it online, available for people to watch or hear. And I also want to get the information that Michael added and give Thomas Phelps credit, who also wrote parts of the book, or wrote the book with Chris Meyer together, the 100-bagger book. Thank you, Michael. There's one question coming from the chat that I find quite good for the next point. Someone has, I couldn't spell your name, I don't know what it is, has a hard time grasping the idea that SNP is switching to software instead of consultants. Can you get more details about this, please?
It's very easy. So you just need to look at their breakdown of revenue. The company provides a very clear breakdown, what percentage of the revenue is coming from software sales and what percentage is coming from hiring our consultants. And that's now moving, I think it's moving towards 50%. It hasn't moved past 50% yet. That used to be way, way different. It will predominantly become a software company. What I have to admit, what I find fascinating and also find difficult to grasp is that software can be so clever nowadays that it can do the work that previously you had to have consultants for. But the company is signing major agreements with Ernst & Young, Accenture, Microsoft, Google. They're negotiating a big deal in Japan right now. So we have proof of concept. So my lack of ability to understand the actual code shouldn't stand in the way of making an investment decision that is actually working. And then you look at the breakdown of revenue and it's absolutely crystal clear.
Interesting. There's also one question about the focus solely on SAP to SAP transformation. Isn't that a risk?
It's not a focus, and I have to say I didn't make that clear enough in my original report. So the SAP subject is a very exciting one because there's this wave of software transformation coming that large companies that are running SAP software have to go through over the next couple of years. And as usual, from what I understand, what usually happens is that company push these things out as far as they can because they say, yeah, I don't need to do it this year, I can do it next year. And then eventually they all want to go through the same door at the same time, and there's a bottleneck situation. And if you then provide a solution, you have even more pricing power. And that's going to provide a very nice, the German word would be a Sonderkonjunktur, like a special boom for SNP over the next couple of years. And I emphasized that, and probably what I didn't make clear enough, but I wrote an update and a separate report about that briefly to my members. It's SNP software is, to my understanding, dealing with transformation, corporate transformation in the broadest sense. And transformation happens at any time for whatever reason. As I said, could be mergers, acquisitions, tax changes. A simple modernization of software. I mean, most banks still run software that dates back to, like the Middle Ages. SNP is certainly not going to run out of work, but I am the first one to say that the company has to do a better job at communicating this, because I think it's currently the single most misunderstood factor about the company. Everyone thinks that, okay, 2024 comes, this SAP thing is over, and then they run out of work. It's far from that, but the market hasn't fully digested that yet because it's not been explained well enough yet.
There's one question about the idea that they transform old IT system is coupled to old companies. A lot of them might not be existing in the future. Is that a true picture that can be described to the work of SNP?
There are always some old companies that disappear, but I think it takes a long time before companies disappear. And I mean, I've heard this too often in my life already, that stuff disappears and then it doesn't. I mean, books were supposed to disappear, bookshops. I mean, banks are still around, fintech still hasn't replaced banks. And I still do not know a single person who keeps a meaningful amount of money with a fintech company. Everyone has a TransferWise account and you maybe put, 10,000 euros into that to make all sorts of payments, but no one puts serious amounts of money into these companies. So I think these are very long processes. We're looking at decades here. So I wouldn't be too worried about that. There are enough old companies that have oodles of money to pay for software transformation to cling on to life for another decade or two.
There's this example of COBOL that came up during the crisis because the US unemployment system is running on this code that's from the 60s, and they had to get retirees from their pension homes to code for the system because it wasn't updated, and so there was a certain peak in demand for these guys, which is a crazy story, but it really happened. I think you have to Google it and find out. There are some articles about it. How do you get confidence that the transformation SNP is doing is successful? Maybe you answered it also already a bit, but maybe you can enlighten it a bit more.
I think what gave me the biggest confidence in the meantime is that one of the great advantages of operating a blog is that you have all sorts of readers who actually work in these industries. And in the meantime, readers have stepped forward and have said, I'm actually working with this stuff. And it's amazing, or they know someone who works in the company who's been through that process. So outside, I mean, you can look at the numbers speak for itself. You can look at the partnerships, and the partnerships they're signing are amazing. And these companies, I mean, for Microsoft to sign a major agreement with a software company in the provinces of Germany, that's something that, something major has to be there that they feel attracted to. And then on top of it, when you hear it from practitioners who just have, field experience, I think that's very, very reassuring. Saying that, I'm not a software expert. I'm also just a stock market investor who tries to make sense of the world using all the publicly available sources that are available to us. So I don't have perfect knowledge either.
Same here. Knowledge is always a thing you can get more and more. That's the interesting thing about investing, that you can learn a lot on every day. How do you see S&P in 5 or 10 years?
So with S&P, there is more communication and convincing that the company has to do, from my perspective, to help me shape a vision in my head where the company is going to stand. And that might just be my prejudices and my bias or my prior experiences or my lack of understanding. But in the case of Fiverr, I have a crystal clear image of that. In the case of S&P, I'm still piecing these things together. And I think that refers back to that point we just discussed, that beyond what S&P is doing for SAP, what is coming after that is something I think the company needs to elaborate on a bit further and help its shareholders to understand it. These are very complex industries and fast moving. And I have great confidence in the CEO there, has done an amazing job, and he's also the largest shareholder, which, in a way lets you sleep soundly at night, because, there's a person who has been successful already and whose interest is aligned with your interest. That said, there is a limited visibility there right now, and that definitely needs work.
Here's also, to sum up maybe our discussion on S&P, a good question. What does good management mean for you, and how do you conclude that S&P has a good management? And there was also the question some minutes before about the sale of Kleinfeld's stake and his departure from the company. Maybe you can combine this in your answer.
Absolutely. I think the key factors to look for are really prior track record. What have these people achieved in the past? And ideally also just simple alignment with other shareholders. Nothing speaks a clearer language than a manager, a CEO, or a board member who also holds a significant stake that puts you all into the same boat. That said, for that reason, having Kleinfeld on board, the former CEO of Siemens, was an amazing coup when he joined the board of the non-executive board, the Aufsichtsrat, and he bought, together with other private equity investors, a 9% stake. He recently left in a surprise development that no one saw coming, and he left from one day to the next, and there was an announcement that he's just stepped down, which was not good. It was not good news by anyone's means. No further information has been released about that, and no one currently knows what will happen with that 9% stake that his group is holding. That being said, I have been in various boardroom situations, and without having met any of the people, I'm just speaking conceptually, all sorts of boardroom situations arise for reasons that are not always, entirely rational or related to the company. It could just be a clash of egos. Kleinfeld was the CEO of Siemens. He was on top of the world, and he may have very strong opinions about where things have to go. And then you have a CEO who has built the company and who owns 20%, and he will also have very strong views where the company has to go. And when these things don't match, then conflicts happen. I have absolutely no specific information about it. I would say one thing though. So what S&P really needed for this phase that I described as making the switch from just being a consulting company to a software company, S&P needed a couple of lead clients, like showcase clients, where they could really say, we've got Ernst & Young, Accenture, Microsoft, Google. And finding these first clients of that caliber, that's the difficulty. And I'm convinced that this is something where Kleinfeld really helped by picking up his phone and speaking to his former CEO buddies. Now that this is in the bag and S&P has the credibility of these deals, I think they can do this by themselves. So it's not an absolute, horrific disaster that he has left, based on what we know. It also shows how situations evolve, and there's never a guarantee that you don't have some unexpected developments. That was the Kleinfeld chapter, as far as I know.
I want to now open the floor for the 10 questions and announce. So if you have questions to Swen that aren't covering the topic of S&P and Fiverr, please drop them in the chat again. I will also have a look on the old questions, but it's better for me and easier for everyone to get the new questions or the questions re-added. So please type them in and ask them to Sven. To make a bridge to that, I want to ask a general question, because you've described a good case and there's always new information coming up, and there's also sometimes there's information that changes the case, and good investors have to be opportunistic in that way. How do you deal with this, and how do you make sense of this kind of information, and what makes you change a case and maybe divest at a certain point?
I think what really helps is to have gotten a bloody nose in enough cases in the past, so that you are self-aware of that very subject. New information can lead to you have to change your assessment, and you combine that with having a bunch of buddies who naturally have different perspectives, and you regularly have to bounce off new developments and updated investment cases from you have to bounce them off friends and colleagues, and then also through the prior experience you've collected in your life, spend some time critically rethinking your investment case and really asking yourself, if I just came across this case today, would I buy it again now? And I think that's probably the number one question any investor should really regularly ask themselves. If I didn't already own the stock, would I buy it today? And if the answer is I wouldn't, then it's not a hold, it's a sell. And brutal honesty, and I think just quality thinking time to really critically look at the evidence and make up your mind. That's the most important thing, besides getting outside opinions to help you with thinking things through. And reading very broadly, and reading publications who would naturally disagree with you. That also helps.
Surely it helps. Maybe to start our 10 questions, I want to mirror the structure we had before, like start with a personal question. It was from Aye. I hope I spell your name right. Otherwise, correct me, please. Why Sark and not Jersey or Isle of Man?
So the Isle of Man is I would describe as a fairly horrific place on 340 days a year. It does rain as much as they say, and the place does feel a bit like they're stuck in the 1970s. I've been there on business many times. I've got friends there. I did look at a house there once. I have to say I would not be happy up there in terms of weather and overall quality of life. And then we've got the other obvious cases here are Jersey, which you just asked about, and there's also Guernsey. So they're all Channel Islands. We're all together, but we're also all independent from each other. It's a very, very strange governance structure that no one understands. So Jersey is a place where, first of all, you need 25 million pounds in liquid assets to be granted a residence permit. So it's not exactly a cheap place. And it is, I would say, more a place where you move if you're slightly older and you want to go golfing quite a lot. And Guernsey and Sark, which are next to each other and near each other, so they come a bit as a package. I think Guernsey is a bit more with it, and Guernsey also has, I think a more fun crowd and also slightly younger, and there's more stuff going on. That's my perception. I'm sure that people from Jersey would disagree with that. And at the same time, Guernsey has a different tax system. So I've basically picked the best of both worlds. I live on Sark. We have the better tax system, but I've got Guernsey on my doorstep. So I can always easily get over to Guernsey. So I've, in a way, got both. And it's a lifestyle choice as well. I mean, you shouldn't just live somewhere just because of taxes or something like that. I like Sark because it's so quiet and because it's so pristine, I think, in terms of nature. I've got friends here, we go fishing and we do stuff like that. And at the same time, I can quickly nip over to Guernsey. And the fastest I've ever done from my doorstep to London Victoria Station is 3 hours and 5 minutes. So, the big smoke is not too far away either. In normal times, we've got 6 flights a day from Guernsey.
We have questions on hedging and portfolio management for you. What are your takes on this? And maybe also with recommendations, where can people find out more about those questions maybe?
Very good question, and it's an area where I have huge deficits, which I recently realized, and I wrote something about it on my blog as well. I really need to educate myself more when it comes to the hedging subject. It's something I ignored pretty much in the past, and I think two things happened. One is I missed out on money I could have earned, and the other thing is that you can secure your portfolio against the increasingly violent fluctuations of the markets. A friend of mine told me a couple of years ago that he thinks that the crashes get more violent every time, and the most recent one is, yet more evidence for that theory. I mean, I've going from the '98 crash to the dot-com crash to the great financial crisis to the coronavirus crash. It just got worse every time. And I haven't really done any hedging in the past, and I feel that is a huge mistake on my side. So I have a good friend of mine, Jens Rabe, a German as well. He's written 2 books on options strategies, and I've just read his first one. I'm now soon going to, I have to start on the second one. That was my starting point. I'm very early in the process. I consider myself a complete newbie when it comes to that subject, but I can only say anyone who has not educated themselves about it, don't wait until you're my age to start with it. I think it's something to definitely look into as soon as possible and educate yourself about it, and crucially make it part of your portfolio management. It has to be an integral part of that.
There's also a collection of questions on skin in the game. How much of your own money do you invest in your ideas you're presenting through reports, and how you're dealing with that?
I'm always investing into my own ideas. That's fully disclosed as well. I mean, this blog really started on the back of something I love is testing my thesis on an audience. And I think there's no better way to critically analyze your own investment ideas by writing them down, first of all, if only for yourself. If you can formulate a coherent case that convinces yourself and that hangs together, then you're probably, one step closer to having found a winner. And even better if you can then run it past an audience, and that could be just a couple of friends, or in my case, I just send out stuff to, by now, a reasonably large audience. And I get back all sorts of feedback, sometimes from people who work in these companies even. Running a blog is an extraordinarily useful tool. Yeah, I think there is, I also feature a lot of other blogs on my website that I think my readers should follow, because I think there's a real upside to sourcing investment ideas from people who have their own skin in the game. And the internet is a wonderful way to do that nowadays. And I mean, obviously in the finance industry, it's a lot more difficult nowadays with investment funds. What is the fund manager allowed to do, et cetera, et cetera. That's become very complicated. And with blogs, you can just find investors who say, I've got a great idea. I've invested my own money. Here's my thesis. Do with it what you like. It's your decision. It's not investment advice. And I think that's an approach that I've chosen for myself. It's great fun, and it seems that other people are enjoying it as well.
There's a question on the hint on your next report. Maybe I can already disclose it if you allow me to. It's
you can,
a company from my city, from Stuttgart. It's on Porsche. Again, you're planning to write on it.
I'm doing it next couple of days. There'll be an extensive new report. I decided not to write an update, but actually a standalone new report about the whole Volkswagen Porsche situation, which I think is very interesting. Just about to finish that.
And if we're in the topic of writing, there was some question on your book. What's going on with your book, and when we can expect it?
Yeah, so briefly as background, in 2006 and 2007, I published 2 books in German only, unfortunately, at the time. And they were called The Travel Diaries of a Stock Market Professional. It was about me traveling the world and finding interesting investments along the way. And I've basically forever had inquiries about when's the next book out. And I will be sitting down in August to make a draft just for myself first of potential topics and ideas for a potential new book, which will be pretty much in the same spirit. I mean, it's a fun concept. People like it. I like writing it. I will definitely write it in both English and German the next time. If I do it, and I think in August I will make the decision whether I've got enough ideas for that, and when I will write it, and how it will be published. That's my job. I like using August, which is a quieter month, to do a bit of strategic work and strategic thinking that requires some downtime. Not that I haven't had enough of that recently, but that's coming your way soon.
That's great. Again, a question from Michael. He's asking a lot of questions. It's about your regional focus. You already mentioned Africa and Poland as two areas that interest you, that are big enough to interest you for a while. But is there a third or a fourth region that interests you currently?
I would rephrase that question slightly. So what I'm trying to do with my blog is to really cover the world. I mean, one of the reasons why I'm writing this is because I want to educate myself about what's going on in the world. And I want to get a better understanding of all the different things that are happening on our planet. And I have a bias and a tendency to focus on Europe because I live in Europe and I have the most contact, the most experience here. I have been slightly frustrated last year because I was aiming to have a perfect spreading out of stories across the entire globe. And it became very European with a bit of stuff from elsewhere, but not enough. I had the idea, or my plan for this year was to travel through Asia for 6 weeks in summer and really get myself up to speed about a lot of places and trends in Asia, which for obvious reasons I'm now not going to do. But I'm hoping to, find more interesting ideas to write about certainly from Asia. And somewhat more specifically, I am looking at Brazil right now. Brazil is one of the cheapest markets in the world right now. And I mean, by God, do they have problems over there. Cheap for a reason.
Something is cheap for a reason, but other things might not be cheap for a reason as well.
Yeah. But Brazil is so down and out that I'm interested in it right now. And I've been to the country. I feel like I have a little bit of an understanding about it. I have a great interest in Poland right now, and I'm going to publish a little series about Poland next month. And I'm also organizing a trip for a couple of fund managers to Poland in September. So there's definitely something coming from that end. I've spoken to a friend today who's an emerging market fund manager who knows a lot about Turkey. And I've asked him, isn't Turkey a place that's now so out of favor and has such a horrific reputation that we need to look at it? And he was very much in agreement with that. I think I only know Turkish Airlines. I'm absolutely oblivious of what's trading in Turkey. So I'll be looking at that.
Should have a look at the video I did with, I released a presentation of Pavel Begun. He's covering Alka, like the sweets in Turkey.
See, yeah.
I will send you the link afterwards. Or
yeah.
Also
and you've just demonstrated how a good network and the internet generates new ideas and leads.
Yeah, surely.
Yes, so I'm trying to spread out, but I'm a one-man operation and I can only look at so many things, and writing these reports takes a while. So maybe my ambition to look at the entire globe on an ongoing basis will remain an ambition.
Let's go from regions to industries. You've, at the beginning of the year, if I've came in contact with your reports, there was a lot of airline industry and travel and space industry. What's your take on that industry currently?
I mean, obviously, my timing on picking two airlines at the turn of this year was atrocious in retrospective, given what's happened with the coronavirus. I have a much more positive assessment of their chances of recovery or their prospects of recovery, because I do not see everyone sitting in front of their Zoom screens forever. People want to go out and travel and see the world and visit their relatives and all that sort of stuff, including business meetings. I mean, I also have business meetings to run, and speaking for myself, and this is my bias, I will not change my amount of business meetings. There are certain meetings you have to do in person. There's no other way. And then other things you do by Zoom. But I mean, that was the case before then as well. And I mean, I remember as far back as the Gulf crisis, the Gulf War in 1990-91, the business newspapers were writing at the time that business traveling is dead and will never recover. And that seems to be a recurring story in every crisis. And so far, it has always recovered. That said, I am currently looking for new industries that are maybe maybe not quite old economy, but not new economy either. You know, there must be some stuff in the middle as well that is attractively priced. I want to educate myself about the cannabis industry, because that seems to have been torn to shreds. And I know absolutely nothing about cannabis, have never used it. I have no opinion about drugs at all. It's like a subject that I'm completely, I don't care about it. I'm just curious what these companies are doing in that sector. And once there has been such a hype, then I'm interested in digging through the rubble to see who has survived, which was something very, very lucrative after the dot-com bubble, because some of these companies did survive and they created tremendous opportunities and profits afterwards. And maybe the same will happen with cannabis. So anyone who's got good cannabis research, please send it my way.
That's good. There's also a question on Steam cells, Stammzellen aus der Nabelschnur.
Yeah.
What's your take on this field and investing opportunities?
So I have recently published a report on a company that is active in the stem cell field. I have to admit I'm slightly reluctant to talk about that in the online chat, because that is a report that I sent just to my lifetime members, which is a smaller number of readers. So when stocks are not very liquid, then I say that only goes to the lifetime members. I have 2 tiers to my membership. There is definitely an opportunity in Europe to consolidate the smaller operators in the stem cell banks. And there are some listed companies there. There are also some companies elsewhere in Singapore. There's, I think, a Chinese company listed in New York. Stem cells is, I think, an interesting general angle is the fact that stem cells is yet another one of these areas where miracles were promised, and they were supposed to happen very quickly, and everything should change, and stem cell research and therapy makes the pharmaceutical industry obsolescent. And I mean, if you check back the newspaper and magazine covers from like 10, 15 years ago, these were the sort of stories that were bandied about. And then what usually happens is that everything takes a lot longer to materialize, but eventually it happens. And stem cell research and therapy has been a pretty quiet subject in the last, I'd say, 5 to 8 years. And it may just be getting to the point where it's showing results, and we may be in for a revival of the subject. So it's certainly something I would take a very curious look at, provided you find other companies that are in the space.
Before I want to ask the last question, I want to ask the audience to leave a like if they liked our chat, because through the problem with the live stream, I also lost some of the likes, and it's important on YouTube to have a lot of likes that people can see this video, and that sends a signal that there's interesting content in it. And I found it very interesting, but we haven't finished for now. The last question is about Delek Group. People want to ask you for a comment on the current developments in the company.
Yeah, so Delek Group is one that I got truly wrong last year. It's a company in Israel that basically is the Israeli gas producer. Israel is a new player on the energy market. It seemed very exciting that Israel moved from being highly energy dependent on other countries to moving to energy independence and being able to sell energy abroad. That also was a long time in the making, and I found this company that was still is in the hands of a self-made billionaire from Israel called Yitzhak Tshuva, who was at the time buying up lots and lots of his company's stock. What really triggered my interest was the fact that they were investing tens of millions of dollars into buying back stock, which was effectively insider purchases, because he owned the majority of the company. And I took that as a sign that the share price has now bottomed out, and it'll be up from there, because gas production was going to start. They were thinking about new projects to get gas to Europe, also by pipeline, and the major shareholder was dumping all this money into his own stock. And that was a very expensive lesson, that even insider purchases of, to the tens of millions are not necessarily a 100% reliable indicator. What happened is the collapse of energy prices in the coronavirus crash which then triggered the debt covenants of the company, and the company did have fairly significant debt. So Chuva became a billionaire because he was fairly aggressive with debt, and that really came back and bit him in the bum and his shareholders as well. The company was temporarily at risk of actually going under. It was that bad. I mean, when the oil price went to minus territory for the first time in history, Delek Group, even though they don't produce oil, it's gas, but everything in the energy sector got absolutely smothered. During the last couple of weeks, they have, and last week in particular, they have renegotiated some of their debt covenants. So the company is now on safe grounds for now and can start to work its way out of it. But it's definitely something that, first of all, went wrong. And the precise recovery potential we now need to work out. So the deal they did with bondholders only happened, I think, last Thursday, if I'm not mistaken. No one's run the precise numbers yet. It could be an interesting turnaround speculation, but it's certainly a more speculative one because if, for example, we get new volatility in the energy markets, it's a vulnerable company now. One definitely has to say that. But not without hope. And Chuva is a deal maker, and Chuva has gotten through other crises as well.
It was very interesting to have you on, and it was as well very interesting to have your questions on the audience. Thank you very much for those questions.
Thank you.
It was fun, and I hope I see you again, Sven, and also the audience again for other live streams. We're having some upcoming. Next week is Chris Meyer upcoming, and also Danielle Town has confirmed to coming. Dennis Hong is on. I'm in negotiations with one CEO for a mid-cap company, an index company from Germany, who wants to come on and also answer questions. So please subscribe to be informed about this upcoming live streams. And I hope that this kind of active questions asking is continuing from the audience. So thank you very much for being here. And as well, a big thank you to you, Sven. I hope I have you back in the coming weeks and months. And we also have had an idea what we can do together.
Excellent. Thanks, everyone. And yeah, looking forward to doing this again sometime. It was great. Good fun.
Thank you.
Great questions as well. Thank you, audience.
Thank you. Bye.
Bye.